Monthly UPI transactions touched the 10 trillion rupee mark in May and stayed above rupee 10 trillion in June as well. But NPCI is ready to give a fillip to these transactions. The digital payments body will soon test the linking of Rupee cards with UPI, enabling more transactions via the platform and moving towards a cardless interface. On Monday, Business Standard reported that NPCI and banks have decided on the contours of the scheme wherein a merchant discount rate of 2% would be levied on credit card transactions via UPI. This scheme would now be presented to RBI. Transactions up to 2,000 rupees via debit cards on UPI do not attract any MDR charges. India's payment landscape may be booming, but the same cannot be said about its forex reserves. Although RBI had developed a significant war chest, it now seems to be eroding under pressure from a strong dollar. India's forex reserves dipped further by $7.5 billion as RBI moved in to stabilize the rupee. RBI governor at an event last week said that there is zero tolerance on rupee volatility, while also assuring that most of the overseas debt is hedged and hence there is no need to panic. A Reuters report suggested that RBI can spend $100 billion more to keep the rupee from sliding further down. Meanwhile, the central bank is also working to strengthen the banking framework in the country. A fortnight ago, RBI had put 4 UCBs, 2 from Mumbai, 1 from Karnataka and 1 from Delhi, under directions and placed restrictions on lending and deposit-taking businesses. Last week, the central bank announced a 4-tier governance structure for UCBs, accepting the recommendations of the NS Vishwanathan committee from last year. The new system entails classifying UCBs into 4 different groups based on their deposits. UCBs with deposits of up to 100 crore rupees will be part of Tier 1. Those with deposits of more than 100 crore rupees and up to 1000 crore rupees will be part of Tier 2. Those with deposits of over 1000 crores up to 10,000 crore will be classified as Tier 3, while Tier 4 would comprise UCBs with deposits of over 10,000 crore. RBI had also hiked the capital adequacy ratio for UCBs with more than 100 crore rupees worth of deposits from 9% to 12% last week. On the other hand, scheduled commercial banks are ready with another stellar show. Results for the first quarter of this fiscal show that a bounce back in lending and better provisioning has helped most banks tide over the dip in treasury income, which was expected as yields hardened. ICICI Bank's profit rose 50% year-on-year in Q1 and NII jumped 21%. HDFC Bank's profits were up 19% and NII was up 15%.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.